Hello and welcome back to my 10 favorite people. Hope you're doing well. I'm incredibly excited for today's video because I think it's going to save Bitcoin investors from a lot of pain this month. We know that Q4 tends to be incredibly volatile for Bitcoin, and we knew that October was likely going to be green, which is what ended up happening because that's what we've seen for October historically. But November is when the trend actually gets set, and that's when the big moves really end up happening for Bitcoin. If we take a look at the past 10 years, whatever happens in November also ends up carrying over into December. But I'm seeing way too many investors getting caught up in just one potential outcome, whether that's to the upside or to the downside. And I see them getting way too caught up in the sentiment, whether it's everybody being super excited that we saw almost $1 billion in ETF inflows, but then panicking all of a sudden because the last two times we saw those huge inflows, it ended up being a local top for Bitcoin. But then everybody went back to celebrating that MicroStrategy was planning to raise $42 billion to buy Bitcoin in their 21-21 plan, just to start panicking once again once Bitcoin started selling off and wiped out almost $500 million in open interest off of just a 2% move. And that's why we spend so much time talking about different outcomes on this channel, even though I know it frustrates a lot of people that just want me to be all in on one version. And yes, I think the shortened cycle where we break out in the short term is a bit more likely because I do think that the election results are going to have a huge outcome on Bitcoin's price action. But I also understand that there's a real possibility of the difficult cycle scenario because of what's happening with global liquidity and the correlation we've seen with Bitcoin historically with the Federal Reserve's monetary policy. And it's hard for me to envision some huge, spectacular Bitcoin rally while global liquidity is going down because the Fed still hasn't restarted QE. And that's how we end up with these different cycle scenarios. Maybe Trump wins and we end up seeing an election rally over the next few months as the market prices in that excitement. But there's still a chance that because of falling liquidity, we see another major shakeout before we can really break out higher. And then because I know it's what a lot of people believe, even though I don't think it's likely, I went ahead and added the easy cycle scenario where everything is just sunshine and rainbows. Bitcoin breaks out into price discovery, and then somehow the Fed magically adds fuel to the fire by starting QE while markets are in that price discovery rally, which is a scenario that I find a bit unlikely. And then what I find very unlikely is everything just crashing and burning like the macro doomers will have you believe with the broken cycle scenario. But I still like having all of them on here because I think the best way to navigate this market and crypto specifically because of all the volatility we face is by having an idea of what the various options are and then positioning in a way where we can take advantage of the most likely scenario, but also surviving the unlikely ones. And for those of you that have been watching the channel for a while, you know how I position for multiple scenarios. I have the majority of my portfolio in safer spot holdings in case we do end up seeing the short cycle or easy cycle scenario where Bitcoin just skyrockets into price discovery. But then I do have my 30% cash allocation so that I can manage the emotions and volatility that come from these large swings, and in case we end up seeing that major shakeout after the election or due to the falling liquidity because the Fed hasn't restarted money printing quite yet. And I don't plan on changing my allocation no matter what the narrative is unless we see Bitcoin re-enter what I consider to be the cheap zone, or if we see a clean weekly close above the previous all-time high and we really see Bitcoin confirm a rally into price discovery. And it is funny that once again we're seeing some sellers step in above 70,000. Again, the weekly close is what we really want to watch out for here because a lot can happen between now and Sunday. And as of right now, this is still a very clear trendline breakout in my opinion, but the election on Tuesday is going to have a huge impact on Bitcoin's price, as well as the FOMC meeting we have just 2 days after on Thursday. And yes, I do think it's unlikely that we go back to those low prices based on current structure. We really don't want to see Bitcoin closing weekly candles below 60K again. if we're going to have higher prices in the short term, but it is still a possibility nonetheless. So for now, we'll just have to wait and see how this price action develops. This wick doesn't look amazing as of right now, but again, that can change. And as long as we're closing above our recent swing low, no major warning signs for me quite yet. And now we did get some important economic data this week. We saw the unemployment rate come in at 4.1%, which is the same reading we got last month. So it's kind of flatlining here, and it could be putting in another higher low before its next move higher. But the really concerning data print we got today was non-farm payrolls, which was estimated to come in at over 100,000 new jobs created, but instead came in at just 12,000. And as we can see, when it starts to get this close to the zero level and we're approaching more jobs lost than new jobs created, that tends to be quite a large warning sign for recession. Again, one print doesn't mean we have to panic and sell everything. This is a very volatile data set, and it can bounce quite a bit as it approaches this zero bound, but definitely something concerning to watch over the next few weeks and months, because this is something we've seen as we've entered recession, and we're really starting to see that labor market weakness start to pick up in the economy. Now, new jobs created is a bit of a leading indicator, so it makes sense that we're seeing it weaken aggressively before we see layoffs spiking up aggressively and before we see continuing jobless claims going up aggressively. But for now, we just have to keep an eye on this, because this is a very clear sign of labor market weakness, and it likely means that the Fed is going to have to step in quite aggressively sooner rather than later. We did get some valuable inflation data as well with PCE and of course core PCE, which is the Fed's preferred measure of inflation. It's kind of flatlining here at the 2.7-ish region, which isn't terrible. I mean, we really want to see it roll over and head towards the quote unquote Fed's target, but we have been seeing a bounce in trueflation recently, which does concern me that perhaps we might be seeing a bounce in inflation over the next few readings, which could limit how much easing the Fed is able to do. But again, this is just something we're going to have to monitor as it develops, and it's really a bit early to jump to any major conclusions with inflation or the labor market, but we are seeing some early signs of concerning data that we will have to keep an eye on. Now, going back to global liquidity, this is the major thing that I'm watching for Bitcoin downside in the short term. We know that global liquidity has a major impact on Bitcoin and is mostly driven by the US dollar index. And it's great that we're seeing the US dollar index struggle at resistance here a bit, but struggling at resistance is not enough. We really want to see it roll over, and we know that's going to be driven by what the Fed ends up announcing in their upcoming FOMC meeting, and we really want to see the US dollar index roll over aggressively if we're going to see that incredible mania phase from Bitcoin like we saw in 2017 and 2021, and that's also what was needed for the massive alt season we saw during those time periods as well. But I think we are going to have to see the Fed go back to increasing its balance sheet and go back to QE if we're going to see global liquidity reverse and start to go higher, and we have not seen any signs of that quite yet. Perhaps the recent economic data with non-farm payrolls will be the impetus the Fed needs to announce that they're going to be doing QE, but the only way we're going to find out whether or not that occurs is by looking at what happens at this upcoming FOMC meeting. The Federal Reserve is expected to lower their target Fed funds rate by another 25 basis points, but QE is really the announcement we're looking for, because these rate cuts have major lagging effects, and even if they cut by 25 basis points at each of the next few meetings, I don't think that's going to impact markets nearly as much as them announcing QE. Now, taking a look at traditional markets, we are seeing a bit of a correction from the S&P 500, but this is normal as we approach a pivotal election on Tuesday, and as long as we're holding above those previous swing highs, nothing to worry about with traditional markets quite yet, in my opinion. We know the federal government is still running massive deficits. We know that this trend is likely only going to continue as they try to keep GDP positive with a weakening labor market and weakening economy. And we know that eventually that debt is likely going to get monetized, which is bullish for risk assets in the longer term, which is why the S&P 500 tends to go up in the longer term and why we're bullish on Bitcoin in the longer term as well. But for now, all we can do is wait to see what happens with this weekly close for Bitcoin. If we're going to see upside in the short term, we really want to see a weekly close above 71,500. If we close below that level, it likely means we're in store for a bit of a pullback before our next major move higher. And of course, a ton of that is going to depend on the election outcome and is going to depend on the FOMC meeting we have just 2 days after on November 7th. But anyway, as always, let me know what you expect. Do you agree with how I laid out each of these cycle scenarios, or do you disagree with the likelihood of each one? Would love to hear from you. And as always, thank you so much for the support on the recent videos. Thank you so much for watching, and I'll talk to you soon.